Happy Father's Day to everybody out there. It's Sunday, June 15th. It's a little later in the day, so if you're just getting this tonight, I've been out of town today and got back in town. I wanted to make sure I got this show put together for you out there. And I hope all the dads and grandpas and everybody that's celebrating Father's Day had a wonderful weekend here. So let's get started with the show. It's really going to be an interesting topic, I think, this week. We're going to talk about something that maybe we don't really want to admit, but we're going to take a peek at it and see what I'm talking about here. Let's get the show started. How's that for a tease? Yeah. The topic this week is, has the 2025 real estate market peaked? Now, we typically do peak at about mid-year every year, but I think I'm seeing signs that we maybe have peaked a little bit early this year, and I've got some numbers we're going to show and some graphics that we're going to show you that will kind of maybe confirm that, or at least point that direction. So let's jump in here and look first of all at the dashboard. This is the weekly dashboard for week 24, 2025. And specifically, I want you to look right over here, homes listed. We're doing pretty good. I mean, the number of homes coming onto the market are staying at pace or just slightly above last year's pace, which is a good sign. Sale pendings, for the first 6 months or so, we were having trouble kind of keeping up, but as the spring market kind of hit, we've kind of hit the pace of that up until maybe this past week or so. We really haven't increased over last year, and I think that really that April to May business is really what's kind of pushing our closed sales up a little bit, because you can see that we're not really setting the world on fire with closed sales either. We're currently setting at 5,700 plus homes closed year to date, and that's 151 over last year. But I think that number is short-lived here. I think we're going to start to come back down a little bit, and unless we get a surge, we're going to probably get closer to just what we did last year, and we're going to end that year around that 13,200 mark there. This week we'll talk a little bit too about the back on market percentage and where it's sitting this week at 31%. So almost a third of all sales this past week came back onto the market, which is never a good thing to see. So let's go ahead and just kind of take a look at the story that I'm trying to tell you today here. So here is the graphic showing you all homes for sale. Now, again, looking at this graphic by itself, you go, well, that's not bad. It looks like we've outpaced new listings all year long. And yes, we're right knocking on the door there of 4,000 homes for sale, which we never did hit a full 4,000 homes for sale last year. I think it's just a matter of time here this week or next that we'll push over that 4,000 mark. But just because we have more homes for sale doesn't mean they're all selling as quickly. So, I think we're probably going to push closer to that 4,200, maybe 4,500 by the end of the year, around week 43 or 44. But, it's going to be awful tough for us unless sales pick up to kind of get through the push through to make, a few more sales than last year. Now, as far as homes listed by week, this is a better graphic to show you where the weekly activity goes. And, there's a little bit of a cycle in here. We did pretty good this week with Father's Day weekend this week. Really doesn't affect the homes coming on the market during the week as much as maybe sale pendings will next week when we look at, did Father's Day weekend slow down the market on a Sunday, and did that in turn, make our week down a little bit in the sale pendings. But you'll see here week 26 or 27 here, that's 4th of July weekend. We typically always see a slower listing week there as everybody's focused on the 4th of July, and then it kind of picks up. So that's kind of the path we're going to see. But one thing you notice here is that week 12 or week 13 through week 20, we were really outpacing new listings compared to last year. And this past 3 or 4 weeks, we've still outpaced 3 out of the 4, but not by very much. So we're seeing a little bit of a slowdown there as well, right into this little section right here. where the story really kind of tells us that we maybe are hitting, this peak for the year is when we start to look at sale pendings. And this is always a forward-looking graphic or a forward-looking stat that tells us kind of where we're going to go in about, 4 to 6 weeks after a home goes under contract. And what you'll notice here is that really these last 3 weeks have been downturn weeks. We were pretty much on the rise all the way through week 16 or 17, and then it kind of leveled off on week 19 and 20 and 21. And we're starting now to maybe do this downward turn. And so if we were looking at has the real estate market peaked, and looking only at the number of homes pending, we can clearly see that maybe we have peaked on that. But still, again, it just depends on what the market does. We can look at this number a little bit differently and maybe get a little better answer out of that. This is all homes pended by week. So the first one here, go back to it for a second here. This is the number of homes under contract. So this is the ones that, this is the number of homes that we've currently got under contract waiting to close, 2,319. But of those, only, we had 217 went under contract last week, which is a pretty good number down from, the previous year. Again, maybe this is just because it's Father's Day weekend, although, the sales we see going into pending today really don't show up until next weekend. So this really would have been last week's numbers here without looking at Father's Day. And we're also looking at, if you look at this overall, there is a downward trend since about the month of March, when we really started to see our market really hit its peak in March and then come downwards. Now, again, this is homes pended by week, and we'll look at this one other way. And, I've always got this other graphic here. This is looking at it on a 30-day rolling pace. And this one kind of looks just back. So week 24, I said, go back 30 days. So this is the average for these 4 weeks prior. And this tells you a little bit better that, we have kind of peaked. At least around week 15 was our high point, went down. We had a little surge in week 21, and now we're kind of coming back down. And that pretty much matches what we've seen last year at this same time. We're going to kind of come down this line, and unless, again, we see some kind of a surge here, we're going to probably just see this particular statistic kind of level off. And when pendings level off or decline, that means that closings will also decline a bit as we move forward. So what else we got here? Months of inventory is another way of looking at the pace of the market here. This is the number of months that it would take to sell all the homes currently for sale if no new homes came on the market. And we have not outpaced 2024 at all this year. We're still at a slower pace than we were last year. And true to form, we kind of see that, those weeks 15, 16, and through 24, those are the weeks that we've kind of come up a little bit. And it's, we see that last year, the market slows down as we get into the summer markets, and it really never, goes back downwards for the most part. Yeah, there might be a week or two where there's a small dip like we see in week 32 and 35, but for the most part, we see the majority of this, this low point, which is good in this particular graphic. Low point is good for months of inventory. Really starts around the end of February and effectively peaks, in this case, a reverse peak. I don't know if that's the right way to call that, but it goes down and then starts back up around week 16. So here we are, week 24, and we're on our way back up. As far as open houses go, this is the market and the sellers reacting to this type of a market. We're seeing continuously this last year, and also this year, we're seeing more open houses every single week. We're at week 24, again, because it's Father's Day, we typically see a few less open houses this weekend, but there were still 1,047 homes held open this weekend. Many of those were probably new construction. Week 16 would have been Easter, and week 19 was Mother's Day. So you can see those drops in those weeks there. Kind of shows you where the slow points are, but those are the anomalies out of the market. We're consistently seeing right around that 1,200 average open houses on the weekend. So that's still a pretty good number, but we would this is what the market's telling us, is that it's a little harder to sell. So sellers want to get that house promoted better, or continually promoted. As far as price reductions go, that kind of goes hand in hand with the open houses and the slowing of the market. If you look overall, if you kind of look at this, you can kind of see there has been an upward trend, which again, if you look at last year's, those little black lines in there, that's pretty much a common theme until we get to about this point in the year, at which point things kind of start to slow down. If we continue to see price reductions moving upward as we get into the next 30 to 60 days, that's going to tell me that the market is really reacting much more strongly to a slowdown. And anytime you have price reductions, sometimes just because we had 472 price reductions doesn't mean that only 472 homes where prices were reduced. That could be many homes over the course of time that were reduced multiple times. So just in this past week here, 472 times there were price reductions. The back on home stat, this is one we kind of talk about every once in a while, and it's making me just a little bit, I don't want to say nervous, but I'm just watching it closely. The blue dashed line down here, that's 24% was our average last year. We were 24% of our homes were falling apart at the end of at the end of a week. And when I say falling apart, maybe they went into contract and maybe it was an appraisal issue, maybe it was an inspection issue, maybe it was a financing issue. But for whatever reason, last year we were seeing about a quarter of our sales go back on the market. So far this year, our average for 2025 is 27%. So we're upwards by 3% rise. Just this past week alone, we were sitting at 31% here. So 31% of homes, almost a third of the sales this past week came back on the market. So I always remind you that this is a good time if you're working with buyers to kind of keep an eye on those houses that maybe you were competing against and missed out on, because statistically, there's a 1 in 3 chance, or just almost a 1 in 3 chance of that house coming back on the market. So be watching for your clients there. Days on market, yet another indicator. How long, kind of goes along with the months of inventory. Our days on market, we really have not, other than weeks, it looks like about weeks 9 and 10, we outperformed the market this year. But besides that, we've still sold. Days on the market has been slower than last year, with the exception of those 2 weeks, and we've been sitting at right at 16 days on the market now the last 3 weeks. But a year ago we were down as far as 12%, or 12 days on market. Again, if we start to see days on market really start to rise, we see a lot of these different metrics all kind of rise together. That's the sign that the market may have peaked and that we're really into a slowdown. It is a different market that we're used to. We are not in the COVID market anymore. We're kind of in that bottom line, and this might be a good time to maybe have me rethink bringing back the real estate cycle chart again, maybe in a week or two, and just kind of see maybe where we're sitting based on that. So as far as closed home sales year to date, again, we're 151 homes ahead of last year at the same time. But I think we're going to see that drop just a little bit here in the next few weeks, just because of our sale pendings that are kind of slowing down, because it takes 4 to 6 weeks for these home sales to close. So this 151 days, or 151 homes that closed this past week, were a product of a month to a month and a half back of activity, which when we were just a little bit busier. So again, we're trying to get to that 13,200 number, and right now we're well on our way to doing that and a little bit more. But again, are we going to hit that at all based on the activity? We'll end the show here with about 4 slides looking at pricing, because this is also another aspect of the business that we kind of have to watch. And this is a pretty big number here we're looking at. This is median list price for all homes for sale, and the median list price of our homes so far this year sitting at $355,000 for the past 5 weeks in a row, and really never hitting above $360,000. Which we saw in weeks 17, 18, and 19. And if you look at the dashes there for last year, we were at that $360,000 price point all the way back to week 7, which would have been, the middle of February. And we have never hit above 360 at all this year. So 360 is our peak. And a year ago at this point in time, the market was really, median list price was at 370. So home sellers are getting the idea that the market is different, and they're likely we're seeing pricing adjusting to the market demand. So as a home buyer, this is good for you because you're finding that there are more homes out there in the lower price points. Now, if you consider 355 a low price point, maybe that's not what you think, but overall, the median list price, so half the homes are listed above 355 and half the homes are listed below. Just seeing that number down by 15,000 is a pretty good number there. And in fact, if we stayed 355 all the way through the week 42, we'd be almost to the middle of October when we would have seen that same number last year. So it just tells you that the market pricing is changing as far as the price at pending. Now, again, these aren't the prices that homes sell for, but this is the price that the home went under contract at. Median price on that is 320. So again, it's a little bit lower than the list price, but we're kind of hitting the peak there as well. I would say that if there's any bright spot, the pricing is still holding a little bit for the pending sales. But again, that doesn't mean anything because it's just, this is the price that they went under contract at. It's where they close at, which really makes the difference. And what you can see now that we look at the median sale price is that, really for the last 5 or 6 or 7 weeks, we've seen an increase from a year ago. But our 2025 median sale price has really seen its high point on week 18, which would have been back in late May or actually late April. And for the month of May, it's just been kind of going downward here. Now this last couple of weeks in June, we've kind of flattened out at that $300,000 price point. So median sale price is the one that really gets the most press because that's where homes are actually closing at. And we're seeing that we're not seeing. That makes a lot of sense. We're not seeing a great rise in sale prices as we move through the second half of the year here. We're seeing prices pretty much stabilize where they were rising a year ago. So the last graphic here is just looking back over time. This is going back to 2016. Again, the green line here, you can see the median list prices where they were at prior to COVID. COVID hit right in here. And then we saw after that the huge jump in list prices. So prior to COVID, we were used to seeing median list prices under 300,000, not 355 or 360, under 300,000. And then, of course, after COVID, we've seen those prices rise, and you're never going to see those prices just fall back down. I think that you're going to see those stay closer to that 325 to 350. We're seeing that last year we kind of peaked around that 360 mark, and the year before that 365. So I really think by looking at this graphic far out that we have peaked in our pricing for this year. Anyway, that is the show. I appreciate you holding out through the end of the day like you had any choice. But we'll get this uploaded right away to YouTube tonight. And those of you that subscribe to the channel, thank you very much. We're currently at 909, I think is what my count was. We added 6 new subscribers last week. I thank you for that. And in the meantime, I see the fireworks stands are opening, so if you're going to buy fireworks, be careful. But we'll see you all again here next week, and then we'll start talking about 4th of July and the second half of next year. So we'll talk to you all again next week.